Hi there, pro traders, and welcome to our Monday market review. Yet another one here being held on behalf of GoPro Trading Academy by yours truly, Ian Giffen. And I must admit, I think today might be a bit shorter than usual. We have had very little going on in the markets, certainly the markets that we trade over the last week or so. And at the moment, there's no real sign that that's going to change necessarily. I'm actually doing this recording a little bit later in the hope that we did see some action starting to pick up in the markets. But in any case, let's have a look at this. Here you can see the Euro USD on the weekly time frame. And last week, you can see really it was almost an inside bar. In fact, from the previous week's spinning top. But really, it's the daily time frame probably that tells a better story, where you can see, well, for the last 1, 2, 3, 4, 5, 6 days, following that bullish retracement candle, it really has been going sideways. There's nothing really to write home about there at all. And I'd say that this is a consistent picture across most of the markets we trade. In fact, last week, even with our lower time frame trading, where you expect to get quite a bit more action, there was very little for us to do. So that's the euro, pretty typical. But let's have a look across, first of all, the other majors and minors here with the cable. Last week, a very small inside candle following that low test or hammer candle. And again, on the daily time frame, you can see that we've got a whole sequence of candles that are well inside that bullish retracement candle that we had going on 2 weeks ago, in fact. So it's been really dead. Nothing for us to do there. The yen pair is slightly better, but literally only slightly. You can see here on the weekly time frame with the dollar yen making another higher high, but failing to close outside the previous candle's price territory. So it was not an impulse candle. And again, the picture here on the daily time frame, you can see that last week, Tuesday, we did actually have a little trade on the lower time frames. And that was, yes, that was Tuesday. But apart from that, it was just been a retracement, and then Friday was just another inside bar. So again, you can see the action has died down almost completely. Dollar Swiss, where we've seen a lot of action over the last while. Last week, yes, we did get a bearish impulse candle, but of course it did mean that that high has been ringed, which means that this trend, as we expected in our discussion last week, has definitely come to an end. In fact, it was only really a potential trend at any point in time there on the weekly time frame. And here on the daily time frame, you can see that that bearish candle on the weekly really is just made up of a series of slow moving candles, with only one exception being last week, Wednesday, giving us a bearish impulse candle. But apart from that, again, very, very little happening. USD CAD on the weekly time frame, bearish inside bar, pulling back inside of that HTC channel. And here on the daily time frame, Friday giving us a bearish impulse candle. But again, 1, 2, 3, 4, 5, not that much happening through the course of last week. And of course, what we have seen there is the high respecting this resistance level, the top of our daily HTC, being confirmed with a breakdown in that bullish cyclicity. So this is marginally bearish, but really just retracing deeper into the HTC channel. Aussie USD, now the inside candle on the weekly time frame. So that low is not actually ringed, with that being an inside bar, but it may well be ringed by the end of this week. And again, last week's candles really just being a sequence of very little happening. And looking at the Kiwi, another one inside bar, inside that low test. Again, not ringing that low as yet, but that may well happen by the end of the week. And daily time frame, almost a carbon copy of the Aussie. Right, so let's look at the yen crosses, where there was a little bit more action. Euro yen, last week's candle, you can see it respected that preceding wave's high. It failed to get above it and stay above it. But that doesn't mean that this show is over. We still have an intact sequence of cyclicity over here. And last week's candle ringed that low. We did talk about this. We said that this may well happen, which means that the upper boundary of our HTC channel, being what was resistance, now support, has been respected as support. So that's quite an important signal for us. dropping down to the daily time frame, you can see that we are very much inside of the HTC channel, but that bearish cyclicity has come to an end, and we have in fact now, well, it does look like we're getting some bullish cyclicity establishing itself. So for those folks who are looking to trade, who do trade the hybrid strategy, you may well be looking for an entry at the end of today. If you are limiting yourself to class 1 and class 2 entries. If you went for the class 3 entry, then of course you would have already jumped in there on the 20th. So that was a pretty good one, 1, 2, 3, 4, 5. That in fact, I think we spoke about that last week because that was Monday a week ago. So let's wait and see if this does give us a bullish breakout here on this time frame. It will bode well for a continuation of that trend on the weekly time frame, and also potentially give us plenty of lower time frame trading opportunities. GBP yen, not quite as promising as that one, but of course, if we do get continued yen weakness across the board, then this too may well show us a bullish breakout here on the weekly time frame, beg your pardon, on the GBP yen. You can see on the daily time frame though that this there's really nothing happening. That low looks like it will be ringed now with today's higher high. But apart from that, this is setting itself up to really be a symmetrical triangle. So we need to wait for a breakout from that before we can really do anything. Swiss yen, again, the Swiss franc strength, especially against the yen weakness over the last while, has really been one of the biggest themes in the market. And last week was no exception, with another bullish impulse candle, maybe a slightly smaller one. But nevertheless, this is really where we saw some of that action. And again, it was really only at the beginning of the week. So after that, on Tuesday being a nice trading day, Wednesday, Thursday, and Friday all really petering out. So it doesn't mean that the trend is over. It means that we've been in a short-term retracement. So let's look to see if this does come to an end and we get a bullish resumption, which again would be nice for us to start even trading our lower time frame strategies. Right, CAD yen, not really so much, although this is a bit more similar, I suppose, to the euro yen, with this support level, which is the upper bound of our HTC channel, being respected. That low now being ringed by last week's candle. It's a bullish candle. It's not an impulse candle, obviously, but that phase 2 retracement wave is now over, which means technically we are into the next impulse wave, phase 1 wave of this bullish trend on the weekly time frame. So folks who are looking to take advantage of that with a daily impulse, for instance, will be looking for an impulse candle over here to go long, possibly at the end of today. So do keep an eye open for that. The other thing about this, of course, is that this may well be stacking up to be a triangle, but this breakdown is bearish cyclicity. In fact, it never really got going. With that low now, Friday's low definitely being ringed, it looks like, by today's candle, means that we may well be getting a resumption here. So it's still early days. As always, I'm not predicting anything, but our trading strategies do take we use a probabilistic approach because that's the only way to be successful. But this is stacking up to be maybe a bit of an early entry, but nevertheless a good entry for a daily impulse, regardless of what the outcome is. And of course, that's assuming that you're happy to go with class 3 entries. Okay, so Aussie yen, as you can see, this is really much more sideways, and quite frankly, so is the next one. But looking quickly here at the daily time frame, you can see last week, Tuesday was the only day where there was a bit of action. Everything else has been a retracement. But likewise, if the yen weakness carries on, and we get a resumption of that, then we could see a bullish breakout on both the weekly and the daily time frame. But it's really early days, so we've got to wait and see. And quite frankly, it's exactly the same here on the Kiwi yen, no different at all. Okay, so Euro and GBP crosses, quite frankly, I still haven't updated many of these because there's just been no point. So Euro GBP clearly last week just being an absolute nothing burger. Euro Swiss maybe a little bit more with last week's bearish candle, but on the weekly time frame, very much inside of HTC. No valid patterns, but we did note last week that we had that breakout from the HTC channel on the daily time frame. So perhaps you were looking to take advantage of some lower time frame opportunities here, maybe an H4 impulse in the latter part of last week. As you know, I very seldom trade this instrument. But once you had that breakdown in cyclicity, maybe you got short somewhere here. But I really don't think that trade has gone anywhere for you unless you had quite a tight take profit. And you've probably been stopped out by now at or about break even. All right, EuroCAD, same thing. Look at last week. I'm not even going to bother looking at the weekly time frame. You can see that really nothing happening there at all. Same here on Euro Aussie. Tuesday, or in fact, this case was Wednesday, giving us, and Thursday giving us that test at the top of that old resistance level. Maybe we'll get a breakout over here. Maybe this will turn into something. Let's wait and see. Euro NZD, not even as pretty a picture, but likewise having tested the top of the HTC channel. That resistance level, however, still very much intact. All right, GBP Swiss, similar, I suppose, in many ways to the Euro Swiss, but certainly for the moment, here you can see we've got that bearish trend on the weekly time frame. Last week, giving us another bearish impulse candle here. So this is one where you may well have been looking for a setup to short on daily impulse, which you actually did get at the close of Wednesday. Likewise, this hasn't really been going anywhere, so you're still really waiting to trail your stop on this using your 2-5-step rule. Requiring patience with the market being pretty slow at the moment. But these are some of the best trends that we actually have at the moment, and that's not saying much. GBP CAD, likewise, absolutely nothing to look at from last week, flat as a pancake. As well as GBP Aussie, maybe trying to test that preceding resistance level, but not doing much, and even worse on GBP NZD. So there's the last of the GBP crosses. Moving into the other crosses, CAD Swiss last week, bit of a low test hammer candle. Nothing there for us deep inside of that HTC channel. But as we know, we have been flirting with a bearish trend here just outside of the daily HTC. Looks like that low is going to be ringed very weak. In fact, we haven't even had a lower close. That was the open. So the lowest close last week being on Thursday failed to close below that preceding low. So should today's candle close anywhere like this, it means that that bearish breakout has proven to be a false breakout. Aussie Swiss, that's daily. So let's just quickly look at weekly. Had a bit of a gap, as you know, last week between the prior week's close and the open. So it was a bearish candle deep inside HTC, no valid pattern here on a weekly. So we wouldn't be looking to use daily as an execution time frame. But as a selection time frame, being well outside of HTC, you may well have been looking for something here. But I reckon it would have been pretty frustrating with these gaps in the market from day to day, very slow conditions, low liquidity. This really has just been a time to do as little as possible in our trading. Aussie CAD, also, yeah, you can see I haven't updated this on the daily time frame because it's really just a very slow move back down towards the support level deep inside HTC. Aussie Kiwi, likewise, you can see very little happening through the course of last week. Monday, Tuesday, Wednesday, Thursday, Friday. Today is not really doing anything else either. The last of our two currency pairs, Kiwi Swiss, that Swiss franc strength that we've been looking at for some time, still showing itself through the course of last week. So if there was anything, this might have been an instrument where you look to trade. You're not really interested so much here on the weekly, although I guess we did see the bearish breakout last week. So you might be interested in a pullback and a bearish daily impulse. But using daily as your selection time frame, bit of a different story, I guess, because especially if you're trading hybrids, then Wednesday you would have been keeping your eyes peeled. In fact, through Tuesday and Wednesday, it was pretty flat. And in fact, there it was. So on the 22nd, you may well have shorted this market. But as you can see, it went for, what's that, 1, 2, 3, 4-hour candles. And since then, since the 22nd, all the way, in fact, through to today, the 27th, it's just been going sideways as well. So you would have trailed your stop, and maybe you're out, maybe you're still sitting on a small winner, but definitely we're waiting for something to happen across all of these markets, really. Kiwi CAD, nothing at all. This has just been left alone. I haven't even updated that. So Let's have a look at the others. I can't say that there's that much else to talk about. Gold also flat. Monday, Tuesday, Wednesday, Thursday, Friday. Flat. So don't care about that. The stock market indices all have retraced through the course of last week. So bullish impulse candle pulling us back into the HTC, precluding us from having any kind of a class 1M pattern. The best we can hope for here is a class 2M pattern. So nothing really to look at there. And here on the daily time frame, you can see most of that actually just happened on Friday. We did have the breakdown in cyclicity on the daily time frame, but really it was just a single candle, which was an engulfing candle followed by an inside candle. So a single candle wave is what made that breakdown there. But regardless, even if that hadn't happened, we would have had a phase one. So that cyclicity is over. Any trades we were in there before have been taken out on their trading stops. Same thing. Well, I mean, we actually had more trades. I guess we were looking more at the S&P 500, but it's the same picture. And of course, as you know, the Nasdaq on the weekly time frame also come well back inside of the HTC channel now, with us advancing that support level. And you can see here on the daily time frame, likewise, although we didn't get that single candle wave, it is a phase one. So a breakdown on bearish cyclicity, and now we're waiting to see what happens next. Right, oil, as you know, has come down now for 2 weeks in a row, so it's a little bit cheaper than it was. Maybe that'll give some relief at the pumps, but it is still well inside of the ranges. So if you want to talk about probabilities, there's a higher likelihood overall of any market staying within a range, and given that it's at the bottom part of the range, it means it's more likely to go up. Not a prediction at all, as always, but it is certainly more likely to stay within that range unless something fundamental happens. All right, so Bitcoin also here on the weekly time frame, absolutely nothing after those 2 bearish weeks. Still waiting for another buying opportunity. There's been absolutely nothing at the moment, and yeah, we're just sitting with a very, very flat market over here at the moment. You can see that after the last few weeks, last week was where we 1, 2, 3, 4, 5, Monday, Tuesday, Wednesday, Thursday, Friday, all within a very, very tight price range. Right, folks, so that's it really. If you are interested in learning more about how we do what we do, please make sure that you look at the links that accompany this video. And we do have some very important news coming up about next month, which is going to be the 2nd anniversary of our Trading Academy. And for those folks who are involved or who would like to be involved, we've got some very good news coming up for you there as well. So do keep your eyes and ears peeled for that. If you're watching this on YouTube, please make sure you do subscribe and hit that notifications bell as we do bring out professional training and guidance on trading these markets on a regular basis, and you don't want to miss out on that. And if you are on our Facebook page, the Forex Trader, please make sure you like the page and ensure that you are set up to get notified when any new posts do come out. So we are going to be offering a free access to our workshop coming up next month for anybody who is, well, for the top folks who are taking part in conversations on our Facebook page. So make sure you go to the Forex Trader if you're not there already. Take part in the conversations. We look forward to hearing your opinion, and we do respond to everything. So make sure that you jump in there as well. All right, folks. So let's hope that this week brings us more opportunities than we had last week. I'm looking forward to doing some more training in our Discord channel as well. For the lower time frame traders, it's a bit difficult at the moment with us sitting on our hands the whole time. I don't really have anything to show you, except in fact to do nothing, which is a very important skill to learn, of course. But apart from that, I am hoping that we will get some more opportunities for training this week. So make sure you are subscribed to our Discord channel and have selected us as a friend. All right, folks, we'll chat to you later in the week. Bye for now.